measure scheme where we try to turn our hindsight to your foresight. Welcome to the video, Ugo here, and I hope you've had a lovely day. And in this video, we're going to do something a little bit different. Obviously, within this measure scheme is a scheme that we set up in order to turn our hindsight into your foresight. And within this video, we're going to be talking about investing. And in this video, I'm going to be showing you my £10,000 stock portfolio, as well as just detailing a little bit of what my journey has been so far within this. Now, obviously, this looks like a lot and all these kind of things. Remember, this has been built over years, etc, etc. Well, somewhat, but we'll get into that in a second. Now, obviously, I'm not a financial advisor, and even if I was a financial advisor, I'm not your financial advisor. So if you need to invest in or a financial advice, please seek a qualified financial advisor so they can help with your unique situation. So yeah, I hope you enjoyed the video. Hit a like, subscribe, comment in below. What do you think about what I've done in this video? What do you think about my investments? What do you think about it? And let's see how it goes. Now, straight back into the video. You will be able to see I'm going to be going on my phone, and my main brokerage is Trading 212, and then you can see I have two portfolios. You know, one is a stocks and shares ISA, which I will pop about here, and you can see how much is there. And again, you see my invest account, which is just it's a taxable account essentially over here. Now, I'm not going to go into every single investment that I have, but overall you can see right now I'm recording this as of Sunday 4:50, something like that. Actually makes a difference. Once it closes on Friday, it's basically is what it is. When the market closes at 9 p.m. UK time, it's when the US stock market closes, which is the last market to close in our for us essentially. As mentioned, I have a Trading 212 stocks and shares ISA account, and I also have the invest account. Now, when you sign up with Trading 212, which I know for some people they've not been able to sign up now because they're on the waiting list, which is stay on the waiting list. Trading 212 is probably still the best account to use at this very point in time, or brokerage to use in terms of it being cheaper. But from April 13th and in May, they will have some new fees that they're going to be putting in, so it's not going to be completely free, and I'm going to be explaining a little bit about that in terms of what happens to a UK investor investing, especially in US stocks. So guys, as you can see, this is my ISA portfolio right now, and then if I switch over, you'll be able to see my invest account, and you'll be able to see what both of them are currently. And so if I go quickly, I'll breeze through my invest account. Obviously, I'm not going to go in depth into every single stock that I own, but I'm just going to highlight a couple, and then you know, I'll show you I'll show you a little breakdown of my account. Now, obviously, this is the total return. It's right now is up about almost 850, something like that, about 21% overall on the portfolio, which is beautiful. And if I quickly scroll down, you'll be able to see that within my portfolio, there's more green than there is red. 61%, 57%, 60%, 331%, 6%, 4, 14, 8, only 1. Oh, look at you recovering Thunder Bridge. 7%, 23, 1, down 1, 60, almost 60% up, 70% up, down 16. Pfizer, I don't know what's up with you. Metro Bank 50, Mark Spencer 62, Logitech 12, Lloyd's almost 40, Sainsbury's 17, ITM Power, I believe in you, it's down 6, but if I go into it, it's recovering, it's going to be fine. iShares UK Dividend 13, again iShares Global Clean Energy down 4%, but again recovering. Look at that, recovering. iShares Electric Vehicles into, that's just a stupid one, that was just very stupid. IAG 80%, HSBC 20, Halvard 60, Golden Nugget. Listen, you're gonna come back again. It's starting to recover. It's all beautiful, but patience is in this game. GSK, you're the only one that I wasn't sure about. I feel like we may have to part ways at some point in time, because the way your cycle is that you recover for a little period and you go down. I don't like their chart about how they perform in the market, and this has been how they've kind of performed in the last almost 10 years. I don't really like it. GE 6%, Gap, oh wow, almost 120. Ford almost 60%. Again, we're going down. My biggest down is Churchill, because that's a different conversation. ChargePoint down 14, but again, it's recovering. XYZ 70, 80, 40, down 1, down 5, up 22. So that's my portfolio, and if you come over here to the bottom, you can see my breakdown of what I got in here. And my biggest holdings right now is Silver Spike Acquisition Company and Tesla. Now, I'm not gonna lie to you, I hate Tesla as a stock. It's just so stupid. It's actually so stupid as a stock. But recently I got into it. Funny enough, Tesla is the first stock that I ever saw that I lost. I lost £70 and it still pains me till today. And I think, to be fair, we've almost made that back. But during the last, it's about 46 investments currently. But about a few weeks ago, it was about 57. I sold off a lot of when the market went down, I sold off a lot of my investments. Some of them were high, some of them were low, consolidated it, and then I put in the money into Tesla. That's when I exited my position in Alibaba, because I'm not gonna lie, bro, you guys were lukewarm. There was no loyalty. You weren't going up, you weren't going down, you're in between. But yeah, if I go through some of the stocks that I actually have in my ISA account, now obviously for most people, I tell you that within your stocks and shares ISA with Trading 212 is probably the best place for you to start. And even with the fees that they're going to be introducing from April, which I will explain in a little bit, they're going to introduce a 0.15 FX fee, which means that they will charge you once they change it into a different currency. Now, obviously, to go through it, in my previous video, I mentioned some UK stocks that I liked investing in. Now, the only one I've said that I didn't invest in, and which I will invest in at some point in time, is Ocado. That's the only one I haven't, and there's a couple of the ones that I'm watching, like Nvidia, etc. Again, like I said, none of this is financial advice, but this is just something that I'm looking at and doing. So AA, first investment up here. Now, there's not a lot of money in there. It's almost only about £7, even though it's up 22%, which means I should put more. But I don't like holding cash within my brokerage account. So whenever I have any extra cash, from once I've done the main investments I want to do, I always put that money back into any of the little stocks that I want to buy as well. So I've got 22 shares here, 20 shares, sorry. And so that's the reason why this is. But AA as a company, I love them. So obviously, whenever I tell people to start investing, I always say start with things that you know and understand and you use. AA as a company, in terms of driving, I love them, man. They're beautiful for me. They've been beautiful. When I had a car, listen, I've never had a problem. Every time I called AA, they were always there on time. I'm based on time. Listen, and so whenever I get a car, again, definitely AA, I'll be back. But I believe this company will grow. AMD in chips, Apple. Whenever you start, everyone likes to go for the Apple, Facebooks, Amazon, all these kinds of things. Most of these companies are just value stocks, so you kind of know we're going to get in them. You're not going to see the sharp increases like a Tesla or whatever, because a Tesla is still a growth company, still in its early phases. Tesla hasn't showing a profit for a year at this point in time, but they're a company that's still growing, so you're not going to see massive. So it's just, you can see Apple there. It's just they've gone down the dip. Now, there was obviously a market correction, which is that the market went down about 10% before. Now I'll show you my next portfolio. About, if you know what you're doing, you can listen. When you see the money go down, it's stressful, but when you know what you're doing, you can see you're sure it's going to bounce back. So that's the reason why it's about timing the market, not timing the market. So don't just panic sell. And so you got Barclays, banking industry, up 83%. I only put how much, and this is a lesson about how you don't actually have to put much to see where you go. I think I put £20. This was it last year that I invested in this? It must be last year. Yeah, this was last year, like April. This is when I was just putting little money in there. I didn't have a lot of cash reserve to put in there. Look at you now, 83% up. So ChargePoint, obviously Clever Leaves is marijuana. As well as SSPK. I'm investing in the marijuana, the WEED department, because as an industry is one that's touted to, well, not touted, but it's one that's growing very rapidly, especially in the US. Obviously Coca-Cola, similar to Coca-Cola is McDonald's. I used to have McDonald's, sold them. I was mainly in there for, like, value, in terms of dividends, because they're part of the dividends aristocrats, and it's a good Coca-Cola, McDonald's are good stocks to start with because they're kind of stable. Now, in terms of notables of what I want to talk about, is Ford Motor Company. I still see a lot of upside with these, man. I bought them. I've been buying them probably for a year or so now. They're up about almost 60%. I think I've put cumulatively about 120. I should have bought more when it went down, but I didn't. But listen, that's what the investment game. You go up, you go down. Now it's up about 60%. Now I'm going to show you down here, because I'm in the UK and I'm trading in pounds. Whenever I put pounds into here, obviously we donate in pounds. Whenever you buy a stock, what the price is in terms of what denomination it is matters. So because we're buying it in dollars, then Trading 202 will automatically change it and convert it. But because of what's it called, the value of currencies changes and fluctuates every day, you get, those who understand the forex market, in terms of what pound is worth to a dollar today can change day to day. So there's an FX impact, which means the amount of money you are losing because of just because of difference in the amounts you have. So I'm losing about £8-9 because of the conversion between pounds and dollars. Now, from April, within Trading 212, they will be charging you a 0.15% fee for changing that from pounds to dollars, for when you buy and when you sell in a currency different than the one that you deposited your money in. So that's Ford. I had Gap. I like Gap. I got into Gap. I think I got into Gap because of Kanye West. I'm not gonna lie to you. I think he signed a deal with them, so that was a qualitative reason for me to invest in there as opposed to a quantitative one. But that bet has worked out. But again, this was last year, so I only put. Look at that, 117%. That's amazing. Again, this is all very diversified, as you can see. Halford is one that I really like. They're up now about 60%, and I can see consistent growth for them throughout this panoramic until the years on. To speed it up a little bit, IAG, which is basically British Airways Group, that involves not just British Airways, but that involves, let me see, British Airways, Iberia, Vueling, Aer Lingus, and obviously with the recovery starting to seem to come back, we should hopefully be seeing a recovery within the airline industry. So that's where I've invested in that aspect, and then obviously in all these plays, in all these places I put my money, I will look and do continuously increase my positions in all of them, but looking at the place where I can dollar cost average down as opposed to up. So that's the reason why I look at it as red days are always a good day to buy, green days are always a good day to sell. So that's the only reason why I got back to Tesla. Like I said, I hate Tesla as a stock, but I saw my opportunity like 2 weeks ago or last week to get back into Tesla. Even though that £70 I lost, I've gotten it back. It hurt, but I hate it as a stock. It just doesn't make sense. It actually doesn't make sense. How do you go from $400 to like $2,000 in a couple of weeks or months last year? Like, it doesn't make sense. It just doesn't make sense. But again, people are pricing in future revenue into present day. In terms of, I like doing a lot of index fund investing or ETF investing. So iShares, electric vehicles, driving. Again, like I said, anything that I've mentioned before is stuff that I'm investing in and think that are decent. So I have it's a 7% already on this. I have 11 that I've bought manually. I have 13% that's coming in through pies, and it's already recovered from what it was down before. So if I look at the chart over here in the 1 month, it's almost recovered. But I'm in a positive there. ITM Power, I got that initially. Actually, how I came to understand about this stock is that I got it through a referral link, and somebody I got a free share from it, and then that's how I knew about ITM Link in the beginning, because they crossed my radar when I was doing some research. But again, they've started to recover. Last week, the correction that happened, a market correction, is when the market goes down about 10%. It hit them bad, and they just started going down, 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 and now they're coming back up. So it's all about timing the market as opposed to timing the market. So I'm pretty diversified here. You got Royal Mail, Silver Spike acquisition, which I'm up 60%. SPR UK dividend. Now this one is not really big, but one of my big plays in this one was Stagecoach. I believe That's, you know, Stagecoach. If you're in the UK, you know about Stagecoach. It's one of the companies that operates not just buses but also trains within the UK. Obviously, I'm back in Tesla, so Tesla is one of my major stocks that I am in, and one that you can see that even in the FX impact, we're actually in positive. Okay, cool. It's weird how this foreign exchange impact actually works, but I don't know the complete science, but it is what it is. Now, obviously, come down to the Vanguard index as far as FTSE 100, 250. As you can see, I have about the same in them. I have more in S&P 500. It's already 12%. If you're getting about 10%, 12%, you're beating the market. Again, Virgin Galactic, I bought this when it was at $8, and hence why I've seen a huge return. Is at 31% return, and you can only imagine how much it was if only a few weeks ago. I was looking at it like, wow, I had almost like triple this. It was up to like almost 600%. But I look at this as more buying opportunities. William Hill, Zoomedica is a penny stock, so I have like a few like random plays in there. But so far, it's worked out for me. You know, £50 turned into almost £80. So essentially, that's my ISA portfolio. Now, obviously, for these, it's still going to be long-term growth. I continue to bring into my stocks shares ISA. It's a place where you don't pay any capital gains tax, which is any money made on any of your profit. You don't pay dividends tax. The only thing you pay is stamp duty and dividend withholding tax, which is done by the US, which is something that whenever you sign up for these things, they automatically do it for you, so you don't actually see it. Now, in the ETFs, ETFs are just tracking an index fund, and they have cost within them, but ETFs are easier because the cost is already incorporated into the price. Now, if I just highlight over here, so if you can see now, the UK version of the S&P 500 index ETF, VUSA, is in pounds. So because I invest in there in pounds, I actually don't get any problems with foreign exchange, because you buy it within pounds. And so that's just a cheeky way of you understanding how to kind of navigate through that way. So if there's a UK version of the stock, sometimes it might be better. And obviously, in terms of stocks I like here, SSPK, Royal Mail, I need to give, oh my days, look at this. Look at that. Look at the 1 year chart. It's like, I'm creeping. And again, with Royal Mail, it's one of those ones where it's the especially within the situation we're in, everyone needs it. So if you understand the fundamentals of some of these companies, I have not gone too much in depth. I'm just really revealing what my portfolio looks like. But the stocks I really love in here is obviously all my index funds, S&P 500, FTSE 250, 100, iShares electric vehicles, iShares global clean energy, iShares UK dividends. I am invested in all of these things, and also other ones. iShares have really good, and Vanguard have really good ETFs, as well as some plays like Logitech International, which is a gaming industry. There's banks, finance, everything. So the only one, Pfizer. What's happening here, Pfizer, bro? Like, it's not a pandemic, and you have a medical company that is not booming. Like, bro, you have a vaccine. Why is this not reflecting in your team? You went up and you went down. I don't understand. But that's my trading 212 stocks and shares ISA. It's up about £900 right now. I expect that to continue going up. But right now, look, 22% overall on my portfolio. We see that there's more greens than there are reds. And for most of these things, they were hit hard last week. But you can see that they're recovering. Now, going into the invest. Now, obviously, you can actually invest in a normal invest account and not worry. You can earn your first £12,300 without paying capital gains tax, and you can earn up to your first £2,000 in dividends without having to pay dividend tax. But obviously, stocks and shares ISA is normally the best way for you to invest in general, because with the compounding effect, you should expect, if you're a long-term investor, to earn more than that in the long term, and to a point where you could be earning that in terms of interest per year if you continue to build up your portfolio. Now, obviously, I have both the stocks and shares ISA, but the invest account. Now, initially, I purely only use my stocks and shares ISA. The reason why I went into the invest side is because there were some stocks that last year HMRC was like, we cannot do in the stocks and shares ISA anymore, and particularly was actually one of the first stocks that I actually bought, which was NIO, which is an EV company trying to rival Tesla, but doing different things. But it's also a Chinese company. So there's a lot of companies a lot of stocks like the UK HMRC said from last year was not allowed to be in your ISA anymore. And obviously your ISA is a special tax advantage account and a special wrapper. Again, like I said, that you pay no tax in. So I was not allowed to do that. That's the reason why when I believe last year, I think I put the thumbnail, I made a video of saying that you have to sell these stocks now, and you have to sell NIO and a couple of different ones. I bought NIO at like $1, like 22 shares at $1, had to sell it about £300. Just imagine if I put 1k in there, house deposit. Like, but again, hindsight is 2020. That's the reason why, you know, I didn't play it as a penny stock kind of situation, but I played it in the sense of I kind of knew what I was getting into. But you want to get comfortable with when you're investing. So in terms of my investing journey, I started off with little money here and there. Then I started off in committing £20 a month to it. Then I started increasing it to about £100 a month, and then after that I started putting more into stocks than I had in cash savings, and then just started building up like that. So looking at my invest account, you can see that I have about 5,856 invested, and it's down about £600. Now if I look at the 1 month chart, you can see that the dotted lines, you can see that even throughout the crash, I was adding slowly but surely, dollar cost averaging down, but you can see it went all the way down. Look at the bottom. Oh my days, at one point I think I was down almost £2,000, and like the anxiety, the stress. But again, we know what we're doing. So it's gone from about almost 1.9 to back to about 600, and it's recovering. So I have a couple of different stocks in here. The main one I'll highlight is NIO. NIO is my biggest holding, and you can see if I put it on a 3-month chart, look at that, you see it go all the way from there, 62 at a high, to come and taste 35, and now it's all the way back at 45. And I will assume that we're out of the worst in terms of the market correction, and I expect that it's just going to continue going up at this point in time. Not completely, it's going to go up and down, but when you look at the growth of NIO, it's a company that I essentially believe in. There is going to be some hiccups along the road. I don't really particularly like having you very heavily invested in one stock, which you can see in this portfolio. About 95% of it is in NIO, but in the invest side of my account, it's more my riskier situation. So in terms of volatility, I expect that with this portfolio, as opposed to the ISO one, which is a conservative one, well balanced, well thought out. At one point it was 56, at one point it was 70. Again, like I've mentioned, when the stocks market went down last week, I've started consolidating ones from all the little £10, £5, £20 I have here. They're £1, but then I've consolidated that, put them into better stocks. Bought Tesla, sold my position in Alibaba and other areas where I felt that the money wasn't really working for me in the way I wanted it to do. And you always look at market crashes as opportunities for you to buy, as opposed to opportunities for you to run away. But again, sometimes it's a catch-22, because you could catch a falling knife, you could catch it while it's going down. I think you're beginning a deal and it keeps going down, so there's no guarantee. So ultimately, before you invest in any company, you want to do research within that company. Now if you don't want to do research, your best play is obviously to go back and just do index funds. Simple, it's very simple, just do index funds. Hey guys, so yeah, that has essentially been my portfolio. So it's about just over £10,000. I expect it to be worth more in the future as I continue to add to it. Again, when it comes to investing, like I said, I started doing only £10-20. You can see that in my ISA. You can see where I started from over a year ago, and just steady, you know, at one point it was only about, you know, £30 in there, and slowly but surely cashed out, and then slowly you continue going in as you get more confident in it. Within my investing journey, it's been a different kind of situation. You know, I dabbled in day trading. I think I day traded with Rolls Royce. Anxiety. anxiety. I don't have the patience or a capability to fully deal with that. I made some money, but I'll probably never do that again. Again, doing the whole it's going up, going down, it's just stress. Again, you always want to start with investing where you understand. That's the reason why I invested in places like AA, etc. Because it's something I use. Royal Mail, something I use. Halfords, something I want to use because I want a bike. I want that mountain bike. That's what I'd like. That's what I like. And so when it comes to investing, it's all about consistency. You know, if for those who follow me on Instagram, they've seen that like I've made huge gains here or there, and I'm like, should I sell? And then some people will be like, sell, and then it depends. Sometimes I take a little bit of profit, sometimes I hold. But in the long term, it's about holding for the long term or until you see another investment opportunity that is better for you to put your money in than what it is now. So it's all about investing for the long term as opposed to the short term. So this has been my investment portfolio. I didn't go too deep into all of the stocks. Try to give like a little overview about what each of them are. You know, in the ISA one is a bit more balanced. It's got pretty much almost every sector. I got into some of them early, like Virgin Galactic. I got in there when it was only like £8 or $8. Bought 5 of it. Now it's worth 10 times it. Yeah, 20 times. Yeah, money is worth more. And so ultimately, these are what you have to understand is that when it comes into creating wealth, you will seldom be able to do that without investing. Now, if you're investing and you're getting up to like, if you're doing 3%, that's good, but you're just beating inflation. If you get like 5%, you're doing on average. If you get over 7%, 10%, then you are beating the market, and anything above that is just great. Now, obviously, with how the market's going up and down, we may get a crash this year again, we may not, but you may be seeing wild returns this year, but don't expect that to be consistent for the long term unless you're investing in individual stocks. Again, if you're doing that, research the company. Everything that I've invested in here, I think I have a total about right now about just over 50 investments across both my portfolios. I understand what is going on in each of these companies, and I kind of have an area in which I'm like, yeah, bro, I'm going to cut. So I have an exit point, has a place to go in. I think when I started investing, what I realized is that whenever I didn't listen to my gut to go buy this or sell this, that's when I lost money. When I started overthinking, I didn't trust because I've done the research and I understand what I'm getting into. Again, one of the things that I think is difficult a few times was understanding when to sell, because you see when it's going up and then you see yourself going down. But if you're in there for a long term, then you need to understand that exercise patience. This investing thing is not the easiest thing to be doing, but for most people it's probably just easier just invest in an index fund. S&P 500, FTSE 250, iShares, they have a lot of good ones, and ultimately I hope that this kind of helps you. If you think that I'm doing trash in my portfolio, let me know. If there's stocks that you think I should be investing in, let me know. If there's stocks that we should discuss or think about, let me know in the comments below, and maybe I'll be doing updates on what is going on in my portfolio later. But again, this is not financial advice, but I hope this shows just what's going on with me, just because I come out and see it and we talk about stocks. Me, I'm doing it for my own life. And in terms of even being able to save that amount of money, again, this is over a couple of years. If you save £200 here or there, you save £100 here or there. I've turned £10 into £300, so, and that gets sold and reinvested, etc., etc. So building it up, you can start from wherever. It's just about investing consistently over time, and hopefully the sun shines where you are. So I hope you've had a lovely day. God bless you. Hit the like, subscribe, say hi to us in the comments, and I hope to speak to you and see you soon. So have a blessed day and bye.